This is quite simply how I enter a Forex trade. I've got my FX book results on the screen right now, and I'm just going to refresh you so I can show it's real. So you can see I'm up 9% on this account so far. Now, I've been showing everything for free in Telegram, the link's in the description. Just all my daily analysis and all my ideas are shared every single day. Now, in this video, I'm going to show you exactly how I set up my trade, my entry criteria, my risk management, the mindset and psychology, some real trade examples, some common mistakes I've made and how to avoid them, as well as how to make your trading really consistent. So the first thing is setting up a trade, and you might want to know how I analyze the market before deciding on the trade opportunity. Now, in the description, I'm going to drop a link to Telegram, and this is a message where it literally shows you how I do my analysis and how I skim through the charts in real time. I record the whole thing, and I do that most weeks, okay? If you're in my Telegram, you'll know this. But it takes me less than 10 minutes now, between 5 and 7 minutes to skim through all the Forex charts that I follow and just draw up zones and ideas and alerts and wait. A lot of the money that you make is in the waiting, not in the taking action. As you can see here, I like to trade mainly on the 1 hourly time frame, and I just look for zones where prices really spiked off in the past. So you can see here, spiked off, as well as here, it's sort of broken. We're looking to see if it can retest. So that's just some basic ideas of how I set up a trade. The next thing you're going to be wondering is, what exactly is my entry criteria? So the first thing I do, a bit like on this chart, is I find clear zones above and below price where they're very obvious and very clear, and price has clearly spiked in the past. So this top zone is quite a good example. Every time price has got here, it has spiked off, except for this one time where it broke, and then once it broke, it's now been spiking off continually. And you'll see here that the trade idea is essentially, if price gets up to the zone, you just enter a short after some rejection. So that's number 2. If price gets to one of these zones, you're then going to look for a bit of rejection. Now this here, you can argue this is rejection because price came in, but the candle finished way outside, okay? And you'll actually see that if we did take this trade, unfortunately we didn't take it yesterday as I wasn't at my computer at the time, but you'll see that, even getting a bad entry and entering here, you still would have got a pretty nice winner. Another part of my entry criteria is that more often than not, I like to go with the daily trend if that's possible. Of course, if there's like a really great setup and it's against the trend, I'll still take it. The trend is not my main part of my strategy. It's just a nice added complement to the strategy if it's there. The other thing I do is avoid news events. So if there's any big news events, I avoid entering a couple hours before and an hour after, just because when the price spikes around like that, typically, and in fact this happened to me the other day, you can just get taken out really annoyingly when spreads just go really wide. And that's it. And one of the things I would say if you're coming up with your own strategy yourself is that it's nothing majorly specific, right? I search for a few things and that's it. Because if you look for really specific things, you're then going to start to collect loads of data which can conflict all your ideas, because ultimately trading is quite random and it's a game of probability. You can create a good strategy, but sometimes that strategy is still going to be wrong. But that doesn't mean that you're doing the wrong thing or that you should change it or stop it. So it's important that I have nothing super specific, and I've got a few good rules, and I look for some good zones and a clear trend if possible, and some good rejection, and that's it. There's no specific like hammer candle rejection or like engulfing candle. Of course, I'm aware of these things, but there's nothing specific about them, as you're going to see where I'm going to show you some of my trades in a minute. The third thing we're going to go through is risk management. So where do I put my stop? How do I define it? Where to put my stop? I'm going to show you next. So let's just say for whatever reason we decided we want to take this trade here. It's come up to the zone, we want to go short. Now, quite simply, I just place my stop on the other side of the zone. That's pretty much it. Now I allow some breathing room. I wouldn't put it this close. Usually if there's like a mini high, or if this one of these candles had wicked up here, I would place it above that wick. So, assuming that little yellow candle, yellow arrow I've just drawn is a wick of a candle, I'd place it above, any recent wicks or highs. And then from there, I always go for 1.25 risk reward. So I drag it to 1.25. Now, my target is defined by my stop. Now, this is another thing where if I've got a really ambitious target for whatever reason, like let's say, price has not reached this area yet, then this is where I would also consider looking at another trade opportunity. Because if you're trying to go short and price has done something like this, you can have your stop above the recent high, and for a 1.25 risk reward, you're not actually asking for a new lower low. You're not even asking for much. You're just asking for the trends to continue a little bit. You're not asking for the whole move to continue, because if it beats this low, what's to say it doesn't keep going and going? So obviously, when you get setups like this, you'll find in this case that this actually played out really well. But there's times where you just reanalyze and think this through if there's any other better trade opportunities. And typically I will risk just 1% per trade. Now, if I have a bit of a losing streak, I look to increase the risk a little bit. So I don't hedge, which is what some people like to do. I just look for the best trading opportunity, and potentially I will increase the risk a little bit, or I will increase the risk to reward. Now, things like this is what's really given me my edge, whilst making 9% on this account over the last couple of months. The next thing is mindset. Now, don't overthink it. That's my main thing that I've learned, and I've become a lot more profitable since then. Don't overthink it. Look for your setup, and if it meets your rules, take the trade, right? Trading's a game of probabilities. You're going to be wrong. Accept that you're going to be wrong. Accept that your win rate is whatever it is. You should have data sort of showing this, or collect, at least on your way to collecting data to get this sort of number. My win rate is a little over 50%, between 55 and 60. And that's pretty much it. No two trades will ever be the same, ever, but they can be similar. And that's what you're looking for. You're looking for similar setups all the time. And now I'm going to show you my recent trades in my journal, and you're going to see that, in fact, most of them are similar. All the setups look similar. So here we're in my trading journal. Now this dates back to March 2023, before I was really profitable. We're going to go down to my last sort of like 4 or 5 trades. Here we are. So my recent trade was on an FTMO only account. Now I got taken out mainly to spreads. I still would have lost the trade, so that doesn't really change anything. The only thing is due to the spreads, which I'll show you now. Unfortunately, it sort of breached one of the limits on the account, which is really annoying. But it is what it is. It sort of made me rethink everything. I take accountability, and that, next time I wouldn't do this again. I'll do it differently. However, it's also really annoying because on a personal account you wouldn't get this, especially at this time of day. It was just like 1 o'clock. There was no news on either of these pairs because I checked, and I'm well aware of that all the time. So it was just rubbish spreads. Anyway, my most recent trade here, Euro JPY. So we're going to look at this one. Now here you can see in the entry, it's basically, it's in a downtrend. It's broken this sort of support zone, become resistance, and it's respected it once on resistance. It's respecting it twice. So here, the main reason for entry really is the trend. And we're just using this mini area of like recent highs and resistance to just determine where our stop goes. Now, as you know, that ended up being a loser. We're going to look at the trade before, Euro CHF. Now here you can see this is a bit more of a familiar trade, where you see we've got these 1 and 2 really, big bounces to the zone. Then it's broken the zone, and now it's finally coming deeper. Now also it's coming deeper, and you can see it made this high, then it made a lower high. So it failed to beat these new highs, which tells me it's another indicator the price is now struggling to go up, and it looks like it wants to go back down. And as you can see here, Euro CHF ended up being a pretty big winner. And something I like to track as well is what's my max risk reward. So here it looked like it could have easily been 3 or 4 risk rewards. Right, we're going to look at 2 more trades. So AUD CHF. Here, this screenshot's taken on the H4. I believe mainly the analysis was done on the H1, but you can sort of see here price spiked and gone up, and it's broken through this zone, respected, started to reject, and you can see this trade ended up being a winner. It went sideways for a little bit, but still was making sort of lower lows, lower highs, and eventually it won. Right, one more trade we're going to look at, USD CAD. So here, USD CAD has come to this zone, which has been respected and used quite a bit, and each time it's only broken the zone once. Here, respected loads, then broken it a second time. Right, and I decided to go long because 1, it's broken the zone, come back and rejected. 2, it's been in an uptrend for however many days now at the time of this picture. And then you can see here when it finished that it was quite a speedy winner, and it worked out pretty well. Now, from those photos and what we've just been through, I'm hoping that you can sort of see that most of the trades are similar, right? They're not always the same. They never look identical, but they're very similar. And when you take loads of similar setups and ideas, that's when you start to get very useful data, because you're repeating your strategy, right? It's not about what you think is going to happen each time. It's about repeating a strategy to collect data to create an edge. Right, so now lastly, we're just going to talk about a few things. So we're going to talk about some common mistakes I've made and how to avoid them, and also some tips for getting consistent trade entries. So firstly, some common mistakes that I used to do and that I feel like I've overcome. Number 1 is FOMO, and this mixes in with number 2, which is entering without confirmation. So sometimes I'll see an idea, the idea starts to play out before the candle's finished, and I'll get FOMO and I'll be like, damn, like I knew this was the idea, and I know it's going to play out. It just hasn't finished setting up yet, but I'm going to get in now, because if I don't get in now, then I might lose the idea. These trade ideas, just sack them, right? Sometimes you're going to be right, sometimes you're going to be wrong. But when you're wrong, and more often than not you are wrong in these situations, it hurts a lot. And also, again, the data you're collecting is not very useful, because you're sort of, training yourself to enter on some emotion and how you feel. And you want to remove that, and you just want to enter based on what's happened. And one of the ways that I've found really helps this is I always wait for the candle to close and finish. And that is in one of my trading rules. And this helps me create some patience and, avoid FOMO. Another common mistake I've made, which is similar to FOMO, is not taking my time, missing steps and not avoiding news. So with the not taking time part, basically I'll rush through and the first trade idea I see, I'll take. Whereas now what I do is if I see a good trade idea, that's great, I mark it down, but I finish my analysis because there might be a much better idea on the next chart. And the other one is missing some steps and not avoiding news. Well, sometimes I will look up a trade and I'll be like, that looks good, I'll enter. I won't actually go and look through my trade criteria and see if it meets that. Now, the other one is avoiding news, which now I've got it as a hard rule, which I basically avoid entering a trade, 3 to 4 hours before news and an hour after news. Right, so slowly wrapping up the video now, we're just going to go over some tips to get you consistent trade entries. So obviously number one is to stick to your trade entry criteria, but that also means that it needs to be quite simple. I see people with so many complicated reasons for entering trades. You don't need that, right? You probably still have a similar win rate to me, or perhaps you're not even profitable. So just create a super simple trade criteria and admit that sometimes you are going to be wrong and be okay with that. Number two is that you probably need to actually ignore 70 to 80% of your setups, because every time you see one and you think it's a good one, it's probably not, especially if you're not profitable. So you need to be more patient. I'm just looking at my chart now, and I take no more than 2 trades a week for the last month or so, right? Sometimes 3 trades, sometimes 4, but 1 to 2 trades a week really is all I take, and I'm the most profitable that I've ever been. As you've seen, on my Facebook, making 9% and just showing consistent gains. Another way to have consistent trade entries is to, maintain and use your journal all the time with all your trades. Even if you're starting to become profitable, I still use it all the time, because if there's any data that I want to collect or find out, it's there for me. Make sure you write down the why for every trade you enter. Now, this can help you take accountability and potentially avoid bad setups. Let's say you take a trade which you weren't 100% sure on, and then as you're filling in the journal and writing down the why, you really realize that, yeah, this is a trade I probably shouldn't be in. Well, by that point, if you've only been in it a few minutes, you can probably just exit for around break even or wherever the trade's at. So the conclusion, the main thing, regardless of what your strategy is that the strategy is simple and you wait for it to line up. You don't overthink it. You don't look for so many different types of rules. You keep it very simple. You wait for it to line up. You ignore most of setups. That's the main takeaway from this video. The next thing is that you want to, every now and again, go back through your journal, look at the screenshots, and you want to see that most of your trade setups look similar. That's when you know you're starting to become your own trader, your own personal approach, and you're starting to build this nuance and this feeling to your trading. If you want to see all my daily analysis for free, the link to Telegram is in the description. See you next time. Cheers.